Hi guys, can you hear me?
Yes, you are audible.
Yes.
Okay, great. I think Shashank's just running a little bit late. Let's just give him 5 minutes, okay?
Okay. Okay, I'm not going to come on video because today's session is going to be mostly screen share. 90% screen share. Okay. Also, what I have done is I have got someone from the Pro League 1 cohort who has gone through a lot of what we're going to discuss today, and I'm going to let him also give his gyan as well when we start this. Basically, today is very important chapter, very important topic, because today I'm going to show you that Excel sheet, and that is the holy grail for what you guys need to do. Even the first Pro League guys use that a lot, and they use it to analyze companies very well. So we're going to talk about that. But before that, market news of today. Obviously, such a big thing happened today. Can anyone give a quick update of what's happened today? Just so that everyone's on the same page. What happened in the market today? Due to the coronavirus outbreak in UK and other European countries, everything just went down.
So everything crashed today. It went down by about 1,300 points. Yeah, it went down really hard today, which is very sad news for everyone. But also in a very weird way, I think it was good. The reason why I feel it was also good is because, wait, I think someone's mic is unmuted. Okay, yeah. So I think why I find this good is because we needed a correction, right? Our market was going up quite a bit, very fast. I don't know whether it's corrected back to its original levels or where it's supposed to be corrected. But the fall is good in a way. It's actually good. But people are saying Nifty will go down more to 13,000 levels. I don't know about all that. But I'm happy that it actually fell today, because people who bought... Hello?
Just mute all of us.
Navina, just mute that person, right? Please. Thank you. Yeah. So my point was that
I'm happy that it actually crashed today. It went down. All the people who might have bought today something will be slightly beneficial, or even if it goes down tomorrow, try accumulating a little more tomorrow. You'll be in a very good state. Because when the market goes down like this for 1,500, 2,000 points, you know it has to go back up immediately, right? Again, it will go up by 400, 500, 600 points. This happened on March 24th once, I remember, where the market fell 2,000 points and then kept falling for a few days. And then you saw the reversal that happened after March 24th. So if you do have some spare cash, spare change in your bank account, you should start slowly accumulating this. And I think Anthony Waste IPO, I think got subscribed 2 times, but the retail portion got subscribed around 3.5 times on day 1. So that's there as well. Cool. Awesome. Kingshuk Das is my guy from Pro League number 1.
Hey, Shashank.
Hi, Kingshuk. Thank you for coming. And, I just want you to share a few things to the Pro League guys who are in number 2. This is the first time they're going through the Excel sheet. They have gone through the normal screener, PNL, and how to read it. But you have done this Excel sheet before, and we have done many sessions on this Excel sheet itself. I think at least 5 or 6 sessions on the Excel sheet. And we go slowly on the Excel sheet. We don't rush. So tell me, what do you want to do? Do you want to tell them how it is? Do you want to show them something? And then I can briefly go into it in depth. But do you want to give like a quick overview? You can
do they know how to like upload and do the preliminary things?
No, nothing. This is the first session.
Okay, so I cannot share my screen. I'm not the host here.
Oh, okay. Wait, I'll share my screen.
Yeah.
Okay, Navina, I think even I'm disabled. Can you just unlock it?
Yeah, Google Meet is better in this way.
Yeah. Unlock Kingshuk also. Navina, are you there? Wait 1 second. Is there a way I can do it myself? Okay, just give me 1 second. See if you can do it now, Kingshuk.
Wait, no.
1 sec.
Team Avalon Meta is the host.
Yeah. 1 sec. Okay, meantime, do you want to tell them what the sheet is about and how it has helped you before I start the video?
So hey guys, I'm Kingshuk. I'm from cohort 1. And like before coming to the point, like if you want to start analyzing about a stock, right, and don't know where to begin, like this Excel sheet is like the holy grail of it. And this Excel sheet alone cannot help you. You have to do some procedure about it. And after that, this can be used in a very, very sacrilegious manner. So let's drop into the upload part.
Okay, so I'm going to share my screen now. So as Kingshuk said very clearly that this is not an Excel sheet that is the final sheet. I mean, this is not what you will see and make a decision on. This is one of the tools that you will use to analyze a stock better, to figure out what is good and what is bad. Okay, we will go very slowly on this Excel sheet. We will have multiple sessions on this Excel sheet because this is very important for you to understand. So you need to go to this link called screener.in. You know Screener normally, right? It's just screener.in. You have to go to screener.in/Excel. Okay. After this session, I will send the Excel sheet to you guys on the Discord channel. All you have to do is go there and upload the file. Simple. Okay. No confusion here. 1 second. Let me open the chat so I can see you guys if you guys are asking any question. Okay. You just have to go here and upload it. Now I'll tell you what this does. Okay. I'll go back to Screener. Okay. Now in Screener, we will choose some company. Tell me any company, guys. Any company which is good, not bad.
IndusInd. Subex.
No, not a bank. Bank's whole structure is. No finance. No finance because.
Laurus Labs.
Okay, my God. Okay, fine. Laurus Labs. The problem with finance sector, their revenues are different, right? It's net interest income and please mute yourself, guys, whoever it is.
Okay, then DFM Foods, Shashank.
No, I'll do Lotus Labs. Have I done Lotus before? No, right? But Lotus Labs is a good metric. I will show you a good company and bad company. Cool? Okay. Now, once you have uploaded your Excel sheet on that tab that I've given you on the chat, this one, right? Screener.in/Excel. Once you have uploaded the Excel sheet, all you have to do, very simple, just do export to Excel. Okay. Automatically, it will export to you in this format, and I will zoom in as well. Automatically, it'll export the entire Excel sheet in a ready format for you to start understanding stuff. Look at this, all the data filled from Screener in the right proportionate way. Okay, now it opens at the detailed analysis tab. I will zoom in a little bit. Okay, so I'll show you the different tabs that are there. If you have any doubts or questions in the entire sheet, it is here. What is number of shares? Okay, now we all know what number of shares are and what is the price, right? But I've also put here that what is good and what is bad when you're analyzing something like this. So for example, if the number of shares in a company are increasing, it is a bad sign. It is not a good sign. Can anyone tell me why?
Diluted EPS.
Yes, diluted EPS. Did anyone not understand what diluted EPS is?
Sir, I didn't understand.
Sorry?
Sir, I didn't understand.
Okay, so basically you have say 100 shares in the market. Okay, and your earnings per share is say 5 rupees. Basically, each individual person is making 5 rupees earnings per share. Okay, that means the total earnings is around 500 rupees. So matlab 100 shareholders jo hai, each for them, if you divide the revenue by them, earnings per share is around 5. Now using earnings per share, which is EPS, they calculate all that price to earnings ratio, PE ratio, which is called PE ratio, right? Imagine the PE ratio of a company or the industry is say 30 or 27 as how it is in the market right now. What they say is they take the 27 multiplied by the earnings per share, and they say that price of the share should be around 135 rupees approximately. Now what happens is 500 rupees to hai revenue. Okay, this is the revenue, and this is the earnings per share. 5 rupees is EPS. Okay, now what happens if suddenly I take this 100 shares and make it 200 shares? What happens if I do it 200, right? Automatically you will see that the number will go down. It becomes 2.5.
Okay.
Your earnings per share is 2.5. Multiply earnings per share in PE, automatically your price comes down. This is some phenomenon that is applied where in the stock market? When there is something called as a bonus that happens. Remember, whenever there's a bonus, you would have observed that the price goes down. First it goes up. Until the bonus date, it flies up. Okay, and then after it comes down and starts adjusting to the PE ratio. Because new shares are introduced in the market, the earnings per share goes down automatically. So basically, that's just a small example. Stop me anywhere you don't understand anything in the you can interrupt me in the middle, because this sheet is very important. Okay. Number of shares, I put the link here also. Yeah. Sorry, I can't hear you.
Actually my Zoom got disconnected. So you said before.
Sorry. What did I explain now?
My Zoom is connected.
Okay, your voice is breaking, so you might disconnect again. But basically what I said is the number of shares in a company should not increase. Okay, if it increases, your earnings per share goes down. Can everyone hear me, or is it lagging for everyone? Or am I lagging? I'm not sure.
No,
you're not lagging.
You're not lagging.
Okay. So whoever asked me this question, you can see the recording later. But basically what I'm saying, the number of shares in a company should not increase because it reduces your earnings per share. If it reduces your earnings per share, then your PE ratio, if you multiply, it reduces your current market price also. So when people start giving you a bonus, it is not always good. But when is it good to give you a bonus? There is a particular time to give bonus. It is always good to give a bonus when the company is growing really fast. Because when the company is growing extremely fast and I make the 100 into 200 shares, but my revenue has grown from 500 to say 700 and whatever 800, then my earnings per share has not taken a big dip, right? So fast growing companies usually give you a bonus. I mean, if they do give you a bonus, it is good. A slow growing company gives you a bonus, it is not considered that good. In fact, the lesser number of shares in the market, it is more beneficial for the investor because of long-term wealth creation. Like for example, which was that company MRF, HER Motors, you know, they went on because the number of shares in the market was so low, the value creation for them was extremely high. And then they did a split later on. Again, they did a split. They didn't do a bonus. Okay, so it is something like that. Okay, so basically this first sheet, which is called explanations, will just explain. So you should take your time and go through it. What about the price? Obviously price should show an increasing trend, obviously, right? And what is market cap? This is M cap, is also called market cap in crores. Don't mind my spelling mistakes, just go with the flow. Okay, because I did it took a lot of time to make. Show the market cap obviously should show an increasing trend. You all know what market cap is, right? Price into total number of shares. That's it. Outstanding shares. That's equal to your market cap. So if price is going up, then your market cap obviously goes up. Okay, that's how it is. But if your number of shares go up, your price will go down. And the market cap still remains the same. Market cap is something that is the value of a company. Okay, so basically you will look at everything. I have put everything here with respect to operating profit. Whatever is in bold is important. Okay, like operating profit is in bold is important. Sales is not that important as operating profit. Sales is good to watch, but operating profit is more important. Tax rate, PAT, okay, then dividend, etc., etc. There's a lot of things, and I've even put stuff here. Cash flow from operations, which a lot of y'all think that cash flow is not important. Cash flow is the most important in the stock market. None of y'all in any stock market video that you might have seen in the past talk with a lot of importance with respect to cash flow. I believe cash flow is super important because you can show me all the numbers that you're making net profit, but show me where the money is going. Where are you spending that money? That is very important. Okay, so cash flow is super important. Then we have different stuff that I will explain to you slowly. Okay. Now, in the second sheet is something called as a checklist. Now, remember in that Word document I had given you guys a checklist before, right? Now that checklist is incorporated here. This basically says, how do you accept and reject a stock, a good stock? Now you don't have to follow this exactly the way it is. You can obviously put in your own risk parameters, but basically this says how this should be ideally, right? Like for example, when you scan a chart, right? If the price is less than 200-day daily moving average, you should reject the scanning chart. I mean, you should reject that stock because it is not considered good. If it's between this, then you wait until it goes up. If it is here, proceed to next step, and you go one by one to all of this. Okay, is there promoter share pledged? If there is pledged shares, then you reject it, boss. It is scary. What is the operating profit, right? If it's increasing with increase in sales, great, go down. If it is decreasing with sales, obviously it is bad. Reject the share, straight away reject. Don't even waste time. So if you pass all these checks slowly, you pass all these checks, then you're slowly finding the best stock out there.
Understood? What is DMA?
Daily moving average. It is
Okay.
right here in Screener. If you go to Screener, look at this. The average of 200-day. If it is below the 200-day average, the average DMA over here is 328. Okay, of Laurus Labs. You're saying if it's below, not 328 actually. Is it 328? No, it's not 328. But the daily moving average is somewhere here. Okay. So if it is below this price, which is around 200, if it is below this, then it is not considered a very good stock. It should usually be above 50-day, which is considered good. If it's below 50-day, then wait for it to go up. It will go up. Eventually, it will go up, right? Every time it goes down the below 50 moving average, it will go up slowly. But it should not go below 200. Then it is a bad thing. It is considered bad. Okay. Going back. So you guys go through this sheet. If there is any doubts you guys have after I give you this Excel, you need to still look. After looking at the video, you need to spend some time yourself tinkering with the sheet. You need to play around with the sheet, make it your friend. Okay, and if there's any doubts you guys have, you will come and ask me on the chat. Cool. This you guys can ignore a little bit. This comes later. This is the main part. Okay, all the things that you see here, div, that means no data is there. Okay, screw it. We don't need that data. It's okay. It's fine. We are more worried about the data we have. Now look at this, guys. This is the number of shares in the market at a particular given point of time. Understood? This is the number of shares in the market at a particular given point of time. Now what it says is in March 2014, the number of shares in the market were so much. Okay, I think it's around 1, 2, 3, 4, 5, 6, 7, 1.5 crores were there in the market at this time. It all picks it out from Screener. Now, if you look at it in March 2017, the 1, 2, 3, 4, 5, 6, 7, around 10 lakh shares were there. 10 crore shares were there in the market. Okay. Out of 10 crore shares, the price was around 103. So if you multiply this and this, 103 into 10 crore shares, you get the market price, market cap of the company as 1092. By the way, this company in March 2007 had a market cap of 1092. You know what the market cap of this stock right now is? 17,766. That is 17 times more in 3 years. Okay. That's why I said, don't look at the price. Price doesn't matter. Price keeps changing with respect to someone gives a bonus, or if there's a split or whatever it is, price keeps changing. The most important is market cap. Market cap is the true value of a company. So in March 2017, again, guys, stop me wherever you don't understand. I will go quite slowly, trying to explain very deeply, and I will do multiple sessions on this sheet, but I don't want to give you too much information also. So if you have any doubts, you can ask me. Okay. Now look what happens. March 2018, the number of shares have slightly increased, which is a bad sign. Okay. When the number of shares slightly increased, you'll see, but it's slightly increased, not too much, only by some 25 lakhs it has increased. You look at the market cap, immediately has gone down, and the price of the share has gone down slightly. Okay. Now in this next quarter, which is March 2019, the number of shares remains same, but the market, what do you call that? The price went down drastically. That means something has happened in March 2019 that has pushed the price down, and the market cap from 1000 has gone down to 851. And then in March 2020 again, if you look at the number of shares not changed, price fell even more to 695. Now imagine March 2020, it was 65 rupees at 695 market cap, and now it is at 17,000, right? If you just do the math, it's 17,000, 17,000 divided by 695. The stock has gone 24 times in March 2020 from March 2020 onwards. And if you go back to the chart, you will see that March, where is March 2020? April 1st onwards, you will see how the market has, how the price has grown, say from 68 to say 330. Right? This is obviously adjusted to the split that had happened recently. But if the split had not happened, still the rate has gone up drastically. The market cap especially. Understood till here? How this works? Do you guys understand how number of shares and price are so important to market cap? If you don't understand, I will explain in a very simple formula here. Okay. Market cap, assume for a company is 1000 crores. Okay. This is in crores. Okay. Then we have price of the share. And then we have shares. And these two are interlinked. Okay. So for example, if my total number of shares in the market are say 100, okay, what should be the price of my share?
10.
10.
10 rupees.
Perfect. So market cap is nothing but shares into whatever this price of the share, actually nothing else, right? Now the price of the share goes up, goes down, market cap changes. Now what happens if any of this gets changed? So obviously if the price becomes 8 rupees, the market cap goes down to 800 because your shares are the same, correct? But what if, now what happens is sometimes this price of the share changes according to that market cap. But when the number of shares change, that is where the problem gets started, right? Now usually what happens if the market cap of a company is 100, 1000, but the number of shares become 200, then the market cap doesn't become 2000. The market cap still remains 1000, but the price per share becomes half to accommodate the math. This usually happens when you give a bonus of 1:1. Ugh. Okay, 1:1 bonus, you get 100 shares ka 200 shares ho jayega, your price goes down by almost half. I mean, that's the reality of how it is. In real life, it doesn't happen. In real life, what happens? Your market cap is 1000, your price per share is 10, and the number of shares are 100. The company says, oh, listen, I'm going to give everyone 1:1 bonus. Suddenly, the price of the share from 10 rupees goes up to 25 rupees. Okay, and the market cap obviously adheres to that and goes up to 2500 rupees. Then the 1:1 bonus happens, the shares become 200, and the price somehow slowly comes down and starts correcting to find the average price. Somewhere around 18, it'll stop. It will still be more than the price the bonus was issued at. And the new market cap becomes 18 into 200, something like that. You get it?
So, Shashank, does it keeps on fluctuating every time?
Yeah. Every day the market cap fluctuates because the price is fluctuating, no?
All right.
Number of shares is constant 90% of the time.
As long as there isn't any drastic change, it doesn't matter, right?
Yes, as long as there is no drastic change, it doesn't matter. For example, Laurus Labs today is 70,756. Okay. Now, if tomorrow the price of 332 goes to some other price, it will change again. The market cap changes, but the number of shares are the same. Outstanding shares are the same. Unless they do a bonus or something like that, it doesn't change. Or if they issue new shares. Sometimes a lot of companies do this. They don't give you bonus, but they keep issuing some preference shares, some small shares they gift it to somebody and all that. Boss, that is not good for you. That is bad. Like, for example, ONGC came, tried to sell more shares in the market. So the free float increased. The market, more shares came into the market. Price went down. It didn't go up. It's unfair for the people who have been holding before, correct? That's how it is. Understood?
Yes.
Okay. Moving on to the next one. Leave this for now.
Shashank,
Yeah.
What is the difference between a bonus and a split?
Okay. Bonus and split, very simple. Okay. Imagine okay, let me go back to this. Okay, you know that shares have something called face value. Do you know what face value is?
Yeah.
Okay, so if this shares of 100 shares are there and each of the shares has face value of, why is this going into time zone? Each of them have a face value of 10. That means the true price per share of this company is 18 into 10. Actually, the price of this company is 180. And I love shares that have face value of 10 because the true price is something else. Okay. Now a split says I'm going to split the price of the share from 10 to say 5. Okay. Basically, the face value of the share completely goes down and reduces it. Okay. So if you look at Laurus Labs face value became 2 because they recently gave a split, and I'll show you the split as well. One second. This is so weird sometimes.
Shashank, can the face value be ever less than 1?
No, the final face value is always 1.
So which means that after that company cannot give
Can
any
never give you a
splits.
split. Look at this. 29 September 2000, old face value was 10, new face value was 2. So basically what happens, the reason why they do split is because they break your shares into 5 times. So basically if I had one stock here, it would break down to say 1:5, which is the split, right? 2 rupees. That's how it is. So the stock price also falls equally. So if I had 100 shares, I would get 500 shares. But the value of my stock is still the same. The value is still the same.
Sorry, I didn't get it.
I'll tell you. Now the face value was 10 and the price was 18 rupees, correct?
Yeah.
And the market cap is what? 1,800?
Yeah.
Okay. Now that means your value of share, whatever you have right now, is still 1,800 only. Okay. Now imagine the face value is 10. Imagine you as a person has invested. Tell me some amount that you invested. How much did I invest? Okay. Price of the share is 18 rupees at 10 face value. Let's not put 18. Let's make a better number. Let's say 20 rupees. Okay. Imagine you invested 1,000 rupees in this stock. Okay. Shares I own is equal to 1,000 rupees divided by the price per share. I have 50 stocks right now at a face value of 10. Now they come and say, we are reducing this face value by from 10 to 2. That's how many times? 5 times, right? Yeah. Breaking it down 5 times. Or they say 10 to 1, straight away 10 times. Okay, so basically what happens is, if they do 10 to 2, okay, new face value is 2, then your shares I own suddenly become 5 times. 50 into 5. How much is that? 250. You have 250 shares. But at the same time, your 20 rupees price per share divides by 5 times as well. Okay, so 20 rupees divided by 5 becomes 4 price per share. You get it?
Yes.
But the value of your share is 250 into 4 is still 1,000 only. There's no difference. Okay. The reason why they do this is they want liquidity in the market. When a share price goes up very big and it's very expensive, okay, they break down the price of the share. How will you break a price of the share? You can break it in 2 ways. Either you give a split or you give a bonus, the share price will come down. So usually people do a split. after they do once the face value goes to 1, they can never give you a split after that. Correct? Then what they do, they keep giving you bonus after bonus after bonus after that. So let's look at, say for example, ITC. Now ITC, the price is 202, okay, but the market cap of ITC, everyone knows, is a very, very big market cap. It is around, where is the market cap? I don't like the new money control. The old one was so nice. Okay, look at the market cap. It's 2,49,000 crores. Okay, but the price is only 200. That means the number of shares in the market are massive. Correct? If you divide 2,49,000 whatever divided by 200 and whatever 14, you will come to know the number of shares in the market. That's because they've given so many bonuses and stuff like that. So if I go back here, let's look at the splits. Directly in 2005, they gave one split. 10-1, straight, finished. Game over. Okay, directly every person who had one stock got 10 stocks. Okay.
Yeah, the part of the reason they do so is to attract retail investors also.
Yes, yes. See, for example, if there's a stock that is 30,000 rupees, I can't buy. No, even I can't buy. I mean, I'll think 10 times for buying. But if there's a stock of 200 rupees, I can buy. So liquidity increases. After the liquidity increases, now imagine I'm doing really well. Now my stock is like, say for example, Laurus Labs gave a split and I'm at 332. But again, I can grow this 332 can become 1,500 tomorrow. What do I do then? If I want to reduce the price to get back, that's when they start giving bonus. 1:1, 1:2, 3:5, blah, blah, blah. They keep giving bonus. Every time they give bonus, the stock price reduces. That's how it is. Now, that is why Mr. Reliance Ambani is so good, because if you see Ambani, what is the stock price? 1,939, 900, whatever, 1,900. But do you know that Reliance has this rule where they say that they always want the stock of Reliance to be so cheap that every household person can buy. That's their rule. Correct? Now, if you go here, look at the face value of this stock. It's still 10. It's still 10. Okay, that means this is very expensive.
Given bonuses?
They have never given a split till date. Never. All they have done, look at the 0 splits. They have constantly given bonus. Now, when a bonus happens, who gets the bonus? People like me and you, yes?
The person who is already having the share.
Correct. 1:1 means if I have one share, I'll give you one more share. If I have one more share, I'll give you one more share. And if you look at it, he's always given, like 2009, he gave 1:1, 2017, he gave 1:1 recently. But when you give bonus, I have 100 shares, I'll get 100 shares. But who has the most amount of shares in Reliance?
Ambani.
Mukesh Ambani. That means Mukesh Ambani also gets 1:1 bonus. That means his stock number of shares in his pocket double. Then what he does? Mr. Mukesh Ambani says, I'm giving you 65% dividend. 65% is nothing but 65% of 10 rupees, which is 6.5 rupees dividend. Now, for each share that Mukesh Ambani owns, he will get 6.5 rupees back into his pocket. After all the bonuses he's got from day one. Understood?
Okay. What is the maximum face value a share can have?
10. In the market, usually 10. Starts off with 10.
Suppose what if I am doing an SIP in a stock like every month and for 1,000 rupees, and after all the splits, suppose finally its price goes above 1,000 rupees. So what should I do in such a situation?
What if my SIP I'm doing is 1,000 rupees, and though you have to increase your SIP then?
And also, can this happen with an ETF also?
Yeah, if you're any instrument you're placing an amount lower than the instrument amount's value, obviously the order will not go through, no? Whether it's ETF or mutual fund, how does it matter? If a mutual fund NAV is 60 rupees and I put an order for 30 rupees, it will not go through. Simple.
Shashank, why does the companies like MRF does not give splits or bonuses?
It's there. It's everyone's funda is different in the market, no? It's up to them. But MRF I think gave recently. Let me check. HI Motors or look at MRF. Look at the stock price. Can any of us buy this? Nonsense, right? Absolute nonsense. And if you look at the
value of 10 exact.
face value of 10 is also there. Look at the thing, and what is the market cap? Look at the volume. Only 24,000 people have traded in this stock today, buying and selling entire day. On BSE, 1,000 people, because boss, only 24,000 people in the market can afford to buy and sell this stock, or else no money, right? If they do a split, even if they do a full 10 times split, you know, the stock price will be 7,527. For them to actually get it down to 752, they have to do a split of 1:10 and then give a bonus of 1:10 for it to come down to 752. But this is how it is. But it also creates long-term wealth because the demand-supply gap changes, right? Just look at this. This is MRF for you in a brief moment. Look at the 9 rupees, 9 rupees, 3 rupees, 3 rupees, 114 rupees. Look at the amount of dividend. But you know why they can give so much dividend? Because the number of shares are low in the market. So more dividend, higher dividends. Look at the market cap of MRF, only 31,948 crores. That's it. That is half of Laurus Labs, by the way. But the share price is double of that, 75,000. That means the number of shares in the market are peanuts. Very, very, very less number of shares in the market. You can check that very easily. If you want to know the exact amount, I think you can go to NSE India and check it. So that's why I said less amount of shares in the market is considered good. Look at the issued capital here. Okay, if you go to NSE website, it shows you here. Basically, there's only 42 lakh shares of MRF totally to play out here. That's it. 42 lakh shares. Understood? So this is how it works. And they have never given you a split. Okay, they have not increased the share at all. They've not given you a split at all. Let us see if they've given a bonus. They're given a bonus in 1975. After that, no bonus, no split. But if you look at dividends, in a year, they're giving 3 dividends. Let's see if they're giving more. I want to see how much they gave in 2019. In 2019, they gave 3 dividends. They gave 3 rupees per share. Then they gave 54 rupees a share, and then they gave 3 rupees a share again. This time they gave 3 rupees a share, 94 rupees a share, and 3 rupees. But think about it. They're giving 94 rupees a share, or in an entire, whatever, 94, 97, 100 rupees per share they're giving. 100 rupees per share into only 42 lakh shares is nothing.
But there is a fixed pattern that they give a dividend in February and September. And
always, most companies have a fixed pattern. Most companies have a fixed pattern.
Okay.
Even the bonuses, most companies have a fixed pattern. Depends on a good quarter or a bad quarter. Understood? Shares, funda, how the shares work? Everyone understood?
Yes.
Yeah.
Now we'll go back
even
to...
if you, Shashank, even if you have one share, you get a dividend, right?
Yeah, yes, you do.
You can use it every quarter and gain some money.
Yeah, but I would rather see the company. Okay, even dividends, by the way, are not a good thing. Too much dividend is not good, by the way. You know, dividend comes out from the money of the company only, right?
Right.
Results and surplus.
Yes, it comes out from the company's money that they have earned in a year. Now, if you look at a company like, say, ITC, who has unlimited money, they giving me dividend, I don't mind. Because these stocks are meant for dividend only. Okay, because they make so much money in a year. If you go, this is MRF, but if you go to ITC, mad amount of money, too much money they have. How does it matter? But for example, if you think about Subex, Subex is not making a lot of money. Correct? It is struggling to make some kind of money. It makes good money, but not too much, right? But if Subex tomorrow comes and says, hey guys, I'm going to give you a dividend, I'll be like, that's very bad, idiot. Don't give me the dividend. Why don't you put that money back into your company and grow your company? I don't want your dividend. But if you look at ITC, ITC can give you how much ever dividend it wants because it makes 12,000 bloody crores in a quarter. In a quarter, not even a year. If you want to look at it annually, look at this, 39,000 crores, 42,000 crores, 43, 48, 49, slow growth. Look at the EPS, earnings per share, 7.75, 8, 9, 10, 12, not bad. EPS is growing constantly. That way. If you look at a fast growing company, like say Laurus Labs, I don't know whether they have the same format.
Even Laurus gave some dividend recently.
Yeah, Laurus gave a small amount, very small amount.
That is bearable, right? A growing
if it's a small amount, they don't do it for that. They give it dividend. They give dividend so that, you know, you guys are happy and you still invest and keep it in that.
Also, when a person gives dividend, the founder gets the most amount of money out, right?
Right.
So that's a game that is played. Okay, look at the dividend. It's barely anything. It was 40 paisa if I remember right. Okay. And by the way, look at the insider transaction. Insider transaction means people in the company are buying and selling shares. And the founder is this guy, Satyanarayan Chava. He's releasing all his pledged shares from the market, which is again a very good sign. Now, if I want to go to their financials, where is the financials, technicals, volume, financials? Okay, look at this, EPS. 5 March 2019, remember something happened and the price was low, 80 rupees it fell down to. Then 2020 December, this is a quarter actually. Let me go annually. Okay, look at the annual pricing. Okay, this is revenue. Look at the EPS, 21, 20, 15, 8, and then suddenly 23. And this year it's going to be much more than 23. If you look at the net profit trends, pretty good. This is net profit, proper net profit. This is EPS. Even the book value per share has gone down drastically because the number of shares have increased off suddenly. But the revenue, which is the main thing, is constantly growing. And if you look at the quarterly revenue is also not bad. Even in March, they did not get affected. And they're growing every quarter more than the previous quarter. That's why I like this company. Okay, let's go back.
Shashank, can I ask a quick question?
Yes, man. Tell me.
Yeah. So you were referring to MRF and their number of issued shares being less being a good factor, right?
Yes.
But what if the company promoters hold a lot of shares and it is not a trustworthy company like MRF?
Then the demand supply will not work, correct? If it's a bad company, there won't be any demand, yes or no? If there is no demand, why will anyone buy the share of the share?
True.
Simple. Entire share market works on boss demand and supply. Why did so many people buy Burger King? Why did Burger King go up so much? From 60 rupees, it went up to 200 rupees. Why? Demand supply. The number of people who wanted Burger King versus the number of shares available in the market by Burger King was very less.
Correct. Makes sense.
Yeah.
Shashank?
Yeah.
Is there another way to change the face value other than split?
No. Subex did it without a split. Capital reduction scheme.
Yes, that's why I'm asking.
Yeah, Subex did a capital reduction scheme, but it is not very good. The way Subex did it is because they had so much loss on their balance sheet. To remove the loss, they split my share from 10 to 5 without giving me a change, without giving me extra shares. So in reality, it was bad for a shareholder. It was not good. But what they said was good. My balance sheet becomes clean.
Okay.
It was basically them cleaning their own mess.
Okay.
Okay.
Cool.
Any more question, guys, before I move ahead? This sheet is very big. We will go very slowly, and I want to answer as many, even if the entire day I only cover this logic, because this logic is so important. You have no idea. All this you guys have seen everywhere. Profit and loss, balance sheet, blah, blah, blah. The main problem this people don't understand. Okay. Now, if you want to see, let's try some other company. Let's go to, say, Subex. Okay, let's check this also out. Okay, look at Subex. Subex actually has been struggling quite a bit. Only reason because Subex's shares, the number of shares in the market for Subex is 56 crores. Right, 56 crores is the number of shares that they have in the market. It is very, very, very bad for a company. Okay, they had less shares before. Okay, look at the price was at 53. The market cap was at 370. And then I think 2008 onwards, they just went into a decline. And over here, you see the maximum jump happening that they gave a lot of shares. They converted a lot of debt into shares and stuff like that. It was very bad. Which other company used to keep issuing shares, if I'm not wrong? There was some other company that kept issuing shares. Okay, we can check Avanti Feeds if you want. Actually, Deepak Nitrate is trending now. We can check Deepak Nitrate. This company also has grown very well in the last 1 year, by the way. If you guys have seen, it's grown from 355 to around 900 bucks. It's gone 3 times up. Very good company.
Deepak Nitrite and Naveen Fluorine.
Naveen Fluorine also very good company, yes. No, but how do you know what is a good company or not? After this sheet, we will decide. Okay, whether it's good or not. So look at Deepak Nitrate. Number of shares from here went up. Okay. Then went up again. Now, number of shares going up is not a problem if the company is growing super fast. So I'm assuming that the company, when the number of shares came here, 16, 17, I want to know why it came. Is it because it's a split, or how did new shares get issued in the market? Okay. But after 17, it has been constant. Correct. But 16, 17, something has happened. So we can check if something has happened related to, say, a board meeting or some split or dividend or something has happened. We can check in 16, 17. Okay, when was this? March 16 to March 17. Let's go down. This is how you check. 2014 they had a split, and 2014 was the last bonus that they had given. Okay, so nothing around 2016. So they had given March 13 data is there, March 15, 2014 data has disappeared. Okay, but 15, 16, something has happened here. That means if they've not given you a bonus and they have not given you a split, then there's extra additional 1, 2, 3, 4, 5, 6, 7, extra additional 2 crore shares has been issued by somebody, or 1.4 crores have been issued, but not by any instrument. That means someone has just received 1.4 crores. They've issued new shares and given it, which is okay if the company was growing fast. But if it wasn't, it was a bad thing. Understood? So this will be some internal transaction. Someone issued some shares extra, which is not good. And a lot of companies keep doing that, which is very, very, very bad. Got it?
Okay.
Any questions, guys,
Yes.
before we try moving ahead?
And if I suppose if I buy MRF shares, just one MRF shares worth 75,000, and even if the company gives me a dividend of say 100 rupees per share, that's not very good for me, no?
Of course not. 100 rupees you'll get for that one share of 75,000, but that's not why you buy. Dividends are something like a bonus income that you're getting. You do not invest in a company for dividend, by the way. Okay. You do not make so much money on dividend. You invest in a company for the long-term wealth creation of a company. In the last 1 year, the MRF has gone from 62,000 in December, 63,000 to 72,000. This is where your money grows, not in dividend. For example, let's look at this. Okay. ITC. For example, okay, it's at 200 bucks. The entire year it has been trading around 200. You guys agree? But they gave 10 rupees bonus. Great. See, the entire year. Okay, this is daily chart, I think, but let me open ITC here. It has been trading in the same range the entire year. Very boring. I'll tell you why it is not that good. Okay. Look at this. 1 year, it was around 238. In fact, in 1 year, if I'd bought the same thing last year, it's gone down by almost 10%. Okay. So assume at 238. Okay. I had bought, for example, give me one amount, 1 lakh rupees. I had 1 lakh rupees. Imagine I bought at 238 at the start of December. I got 420 shares. Great. Okay. My 420 shares worth how much? 1 lakh. Okay. Now in the course of this 1 year, they gave a dividend of, say, I think around 10 rupees, right? Let me check that also. In 1 year, how much dividend they've given?
100 rupees.
100 rupees. Okay. They've given, no, I don't think it was 100. It was 10 rupees.
1,015%, right?
Yeah, 1,015% of face value.
1 rupee.
Oh yeah, it was 100 rupees or what?
No, wait, 1,000.
No, that's
No, it's 10
10.15.
rupees. Yeah, it's 10.15.
Okay.
Yeah, it's not that 1,000. It's 1,015% of 1. Right. So if it's 575, it is 5.75. Okay. If the face value was 10, then it was 101 rupees. Yes. But it is not. So this was 10 rupees basically. So what you're telling me, I have got, shit, where did it go? Okay. So what I'm saying is, if I had bought 1 lakh shares, okay, of ITC at the rate of 238, I have 420 shares. Out of 420 shares, I got 10 rupees as my dividend. In the year, I would have got extra 4,000 rupees, correct? Extra in my bank account. Now, let's look at my net value currently at today's date. Today's date, the 420 shares that I own is currently at 202.95, this amount. Okay, so if I do that into 202.95, how much is it? 85,000. My 1 lakh is 85,000. Add that 4,200 I got as dividend. What is my current value of ITC?
My 1 lakh is worth
Billion
89,000 right now. I have a loss of 11 grand. So is it good or is it bad? Right? Dividend is good if the company is growing, the share price is growing. Dividend is considered a bonus. But if you only think that dividend is something that you will make a lot of money on, and a lot of people say this, oh, you have 10 lakhs, invest in ITC and enjoy the dividend. Yeah, if you keep it for a very long time, great. You will make, obviously, eventually you'll make money. But if I look at it from a 1 year timeline, and if I'd invested 10 lakhs, my price would have been currently 8,90,000. 1 lakh loss straight away. Now you still think I'll be like, no, dividend acha deta hai, so I'm going to be invested. No, it doesn't work that way. Understood?
Yes.
Okay, next. Any other question?
Why doesn't ITC want to be like MRF and keep the number of shares low?
I told you, it depends on every company. They want more liquidity. They want to grow. It all depends on different companies.
Yeah, but why doesn't MRF want more liquidity and retail investors?
I don't know. It depends on MRF. If you're sitting on the board, it's up to them. They don't want retail people. They don't want liquidity. They are very happy with 46 lakh shares. Out of that 46 lakh shares, I don't even know how much the company owns. They're very happy. They're relaxed. They don't care about anyone else. They literally don't care about anyone else.
Okay.
So that's how it is. But fast growing companies care about all that. So they keep giving bonus and splits and stuff like that. MRF never gave any split and bonus. There's no incentive. So how do you cover up for that? Basically, you can make a shareholder happy by giving them bonus, by giving them a split, or by giving them dividend. MRF said, I won't give you bonus and split. I will do nice long-term wealth creation for you, but I will give you massive amount of dividend. People were very happy. They were like, okay, cool. You know, people were saying, there was this thing, right, where if you had bought when you were young, you know, HER Motors, everyone knows what HER Motors is. This is the company that does bullet bikes. Your bullet.
Royal Enfield is a
Royal Enfield. Yes, bullet, Royal Enfield, right? The amount of wealth creation that this has given, I have literally heard people saying, "Mera bachche log ka like shadi ho gaya with this company." And there was a theory that in 2005, 2006, instead of buying a bullet, if you had invested the same money in this company, you would have been a crorepati by now, with a garage full of bullets. That's the same thing that is happening right now with Tesla. Do you guys know that?
Yes. Elon Musk is already on the second richest person.
No, it's not about Elon Musk being the second richest person.
Recently, an article came that Elon Musk fans are becoming millionaires.
Yes. Elon Musk's followers who have invested in Elon Musk have become millionaires right now, and they don't even own a Tesla. Instead of buying a Tesla, they have invested the money in Tesla, and they made much more. See, I think this is the one, right?
The Bloom.
This one. This is the article. Let me share it on chat as well. Okay. So look at this article. They bought Tesla shares early and kept faith. After a year, the stock went up 7 times. Is it the time to cash in? But basically what it says is Brandon said does not own a Tesla, right? He's in a small town where he lives. He put every month he had $10,000 of savings. He put in the Tesla stock, and now he's made enough amount of money and he doesn't even own a Tesla by now. This is how long-term investing plays a game. Got it? Any more questions?
Shashank, I have a question not regarding to this. You know, like what happened today, the market fell, and you know it's a good thing. But how should we, you know, take it in? Because you know, even I'm new to investing in all these things. How should we take it in this way? How should we proceed?
Proceed as what?
What is the right method? So you know, what I understand that we should buy more stocks, good stocks at a lower price than.
Yeah. So whenever the market corrects, you buy more, and then the market will go up. Then you cash out. Market will fall again. Buy more. It'll go up. Cash out. A lot of people do the reverse. They cash out now.
Right. So it depends upon us what we like, how we want to proceed.
See, you know for a fact if the company is good, the market is eventually going to go up today, tomorrow, 1 year, 2 years. You know it's going to be more than what it was now today.
Right.
Everyone knows it'll be much more than what it is right now. Find a good stock, invest in that good stock. If it goes up, you make money. It'll eventually go up. It has to go up.
All right.
So when you see the market crashing 2000 points, you should be very, very happy. They're like, oh, nice. This is the time to buy more. Right? And then when it starts going up really big, you start cashing out slowly and save that money to put in when the price goes down like this.
All right. Thanks.
Okay. Any other question? Kingshuk, you want to add anything?
You've covered pretty much everything, I think.
Yeah. So today I'm only going to talk about the number of shares and market.
Did you send them that PDF?
Yes, not the PDF, the Word document, right?
Yeah.
Yes.
What to look at?
Yes. That's basically in this also. This is the same thing, the checklist and all that. But yes.
Yeah, that PDF is also a better thing to look at, because that cash flow thing that you need to look at, everything related to cash flow is well explained in that PDF and the doc file.
Yeah. This is very important, guys. We will cover all of this in one session each. In the next session, we will talk about P&L and balance sheet. Actually, not balance sheet also. We'll talk about P&L. And then we can talk about this also, because the debt is here and debt is very important. Next session, we'll talk about these two. And the third session, we'll talk about cash flow. If you know these three things, you're done. Basically, you have mastered understanding whether a company is good or bad. Rest, everything is secondary. But these three things are super important. If you understand these three things, rest, everything, you will figure it out. Got it?
Also, Shashank, did you give them any case studies like Network 18 and Alok?
No, I've told them to follow Subex and Lotus Labs. And one more, I think, which was the third one?
Digvijay Siemens.
And Aarti Surfactants, 4 totally.
Okay.
Yeah. No, but I think now we'll be following Burger King, because Burger King is quite exciting. Yeah.
Burger King.
No, but I think at your time, the case studies was very exciting because that NCLT thing happened, Reliance Alok happened, Future Retail happened.
All that PPT thing.
All the big things happened. Now after I finish this, I'm going to give them their first assignment. Till now, they've not started assignments yet.
Okay.
Okay, guys, any more questions? We will do another session before we break for the New Year, because I want to finish this off before we go. So you guys have time over the next New Year weekend to figure out properly everything, right? So today is Monday. I have a session with you guys also this week, right? Cohort 2.
Yep.
Okay, I'll tell you, but it'll most likely be tomorrow or day after, depending on when the cohort 1 session is there. But I will do one more session where I talk about this, and one more session before we fully break on cash flow. Before New Year's, you should know how to understand this sheet by yourself, and after New Year's, we will come back. Got it, guys?
Hello, Shashank.
All right.
Yeah, any more question?
Yeah, I just wanted to ask about Parag Food. I was searching around that. I couldn't find why the price fell down too much.
What is it called? Parag?
Parag Milk Foods, yeah.
Parag Milk Foods. Where is the price? There's something wrong with the industry only as a whole. Why don't you? Did you Google it and check?
I did Google it. There was an FDI investment that was coming up from Australia and New Zealand. That was something that around the time, and I think Amul had taken legal action as well.
No, very simple, dude. Don't even have to Google it. Look at this quarterly result dipping. Okay, going down. Correct. Operating margin percentage from 11% down to 7% every quarter. Your EPS, which is around 3, has suddenly dropped to 0.39 and 1.89. Obviously, the share price has to adjust, no?
Okay. I was okay. Yeah.
Shashank, is there any possibility that Mrs. Bector IPO will start some low price due to this today's fall in the market?
It all depends on demand supply. That means if you're telling me that it's going to list and the demand supply at that point is like this very bad, then obviously it won't go up. Burger King was on a rally. Burger King, the market was on a rally when Burger King got listed. You know that, right?
Yes.
So that's how it is.
Hello?
Yeah.
Shashank, can you make a video of how to use Zerodha? I don't know anything about it. I'm new to it.
What do you mean make a video?
You guys don't
Like
know
how to buy a
Zerodha.
stock, how to place AMO.
I think there is a video where I've shown, although I haven't. I thought I showed.
There's a lot of video on YouTube. You can just search for it.
I mean, it's quite simple. There is no, it's not much of a, okay, let me see if it works. One second.
You have also discussed in various sessions also.
Yeah, where were you in those sessions? It opens like this, right? Your Zerodha portal opens like this. You go to anything like say Aarti Surfactants, you click on buy. If you click on buy, this thing opens here. You can toggle it to buy or sell, but you can buy here. AMO is right here. Regular order is right here. This is for intraday. This is not intraday. This is for long term. Put the quantity, put the price. You want a market price or limit price, up to you. Put a stop loss if you want, but if it's long term, you don't need a stop loss. That's only for intraday, and just click buy. And if you want it as an AMO, you put this, put it as a limit order and click on buy. It'll place an order for you. You can go to orders and see it's here.
Okay.
There's a lot of videos, man, online. You can check it out.
Okay. Thank you.
Okay.
Shashank, what do you think about Anthony Waste IPO?
Oh shit, we were supposed to discuss that. Someone was supposed to talk about Anthony Waste.
Discuss it today.
No, it's okay. There's another 2 days of subscription getting over, right? We'll discuss it in the next session. Somehow Burger King held itself today. The entire market died, but Burger King survived. So yeah, let's see. Okay.
Shashank, would you suggest the same thing that we did with Burger King with this Mrs. Bector?
Yeah. Definitely. But you can see it, dude. See, when the market opens from 9 to 9:08.
Yeah.
You can see the number of buy and sell orders, right?
Yeah, from NSE Live, pre-market.
Yeah, till 9:08 you can see the orders, and you can place the limit order on 9:08 also.
But there is a very less chance. If I'm buying on the listing date, I don't think the orders get executed.
Of course they do. I mean, till 10 o'clock, but Burger King also is trading at 111, no?
Yes, 111.
If the demand, you see that a lot of buy orders and less sell orders, just put a market order and leave it. Whatever rate, let it execute. No, how does it matter? Keep it for 2 days then. And then sell it off. Look at Burger King. No, Burger King settled at 158. It started at 111. I mean, it started at 60, but opening rate was 115. It went down to 110. And now it's still profitable.
Yeah, it was around 175, but around 2 p.m. the entire market crashed.
That's okay. But I'm saying even if you had bought it on the day it opened, which was even on this rate, 135, but it had gone down to 111. Even if you had bought at 111, you're quite profitable.
Yeah.
So it's okay. You can try. It all depends on the demand supply, and you have time till 10 o'clock. It opens only at 10.
Yeah.
Okay, cool, guys. So we'll see you again in a day or two. I will keep you guys updated, okay?
Sure.
Thank you.
Okay.
Awesome,
Thank you,
guys. Have fun.
Bye.
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 Bye.